Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here's our weekly Coinbase chart, and as everyone knows, market will close tonight at 8 p.m. This is what we're basically looking out for, and the way it's looking right now, basically looks like a topping candle. Essentially you get like a long wick up to the top, and then it sells back off to essentially where it started at area. So like the body is almost completely gone, and it just leaves like a big wick on top, and essentially what that represents is just rejection above that area. And it doesn't mean there's like some huge battle going on between like the bulls and the bears. Like there's one group of people that like hate Bitcoin and one group of people that love it, and they're like battling to see who wins, and that's represented in the price chart. Like that's not what this is at all. It's about making money, and it's about resistance and support and swings, and that's what it's important to keep in mind. And I think sometimes people get confused. I come on here every day and basically call your kids ugly, and I know that affects people sometimes, but I'm just trying to keep you have a level head here. So we can participate in these swings to the upside, but it's important to realize we are in a downtrend. Like overall, if you look at this weekly, yes, Bitcoin is going up. And if you invested anywhere from 2015 to mid 2017, you're either up or even right now. So you're fine. As long as you didn't trade, you just bought and held, you're up or even right now. But if you bought any time basically from the end of 2017, so basically 2018 on up, we've either been going sideways or down. This is a downtrend, so we need to pay attention to that. When we came back up here and topped out, we then re-entered into a downtrend. After essentially like a relief rally, we came down, we put in a lower high, and then we're coming back down. So when we came down here, yes, we can say that we came down here and we put in a higher low, so now we're going to go up. But if this sells back off now, and we come down and we take this out, and then we come down here and we take this out and we put in a lower low, if we go lower than 33 or 3096 or whatever, and we put in a lower low, all this looks like is we came in a macro high, a macro low, a macro high, and this will just all look like part of this same move right here. It'll look like the same move right here. This little wick down here will just be part of the same move, and then we put in a macro low lower down here. And I mean, I'm not saying it could be anywhere. It could be $800, it could be $1,300, it could be $2,500, it could be $2,800. I mean, there's a lot of arguments for different areas along the way, but the fact of the matter is, in hindsight, it will look very clear what happened. If this just starts going up to the upside now and breaks to all-time highs, it's going to look very clear that this was the swing low of this move inside of the macro. But sometimes when the move is happening, even when you zoom way out on like a weekly scale like this, it's still not completely evident. So it's very important that we pay attention to that and keep that in mind, because this little thing that's going on right now is nothing in the grand scale of everything. And that's why I'm not like running in and running out to like change and adjust positions and everything. I took profits on my positions, assuming based on technical analysis, previous trends, resistance, support, oscillator indicators in this area, that essentially now we will be selling back off. Now, what happens after we sell off? We can play that by ear. We'll have plenty of time to see how that unfolds. Each one of these candles represents a week. So unless we get this candle right here, we got plenty of time in the next week to figure out what's going on and see what happens here. Do we continue to consolidate and start moving up? Do we sell back off? Do we just consolidate and nothing happens? We have to play that by ear. But based on what's going on now, we're going to try to get a best idea as to what's going to happen in the future and what is happening based on like the actual trend and the oscillator indicators. And right now, it's starting to look more and more like we're essentially going to reverse this back down, put in a topping candle. Last time we did that, we put in this massive topping candle at 14,000. When we did it, we sold back off all the way down to the red moving average, a short period moving average, which would be like 8,700. So if we sold back off to 87 right here, touched it, and then they came all the way back up almost to the tippity top again. So if it went down to 8,700 and then back to 10,150, think about how many people get wiped in that little range, just cleared out, before this actual move unfolds. Because look what happens. It bounces it, comes all the way back up, bounces it, comes all the way back up, and then the actual trend starts moving. So if you just follow this weekly, you're going to be so late to the party. So you need to go to shorter time frames. And that's what we were looking at the other day when I pulled up this chart right here. This is the 4-hour time frame. Same oscillator indicators. And what we're paying attention to is when you see this purple pink cross right here, when you see that cross, it represents the shorter period moving averages crossing back over and a trend taking place, a reversal, a negative trend. And then when you see the blue, it represents the red crossing back above, and then again the positive trend taking place. So that's what I was trying to warn everybody about. We get the purple, we sell off, we get the blue, we get a nice move up. We get the purple, we sell off, we get the blue, we get a nice move up. And then yellow is where it's like crossing around, coiling up, but you're not getting a confirmation in one direction or the other. So here it goes blue, trends up, comes all the way back down, and then fakes like it's going to cross down, but then it doesn't. It comes back up, and then it actually crosses back down. And this is when I made that video. I said it could be another fake out like this, but look, it's getting ready to cross down. And when it crossed down, look what happened. We immediately get that sell-off. Now, what does that mean? Does it mean it's going to come back down and do the exact same thing as last time? No, but there's a high likelihood that it's going to do what it did last time, because that's how markets work, and that's how market makers work, and that's how bots and algorithms work. So if it's going to come down here and test like these next moving averages now, what can we expect to happen? Well, this time when it crossed right here, it came down and it tested the 200 exponential moving average, the blue moving average. Okay? This time when it crossed, what happened after that? It came down and it tested the 200 exponential moving average. It got rejected and then came down even lower and consolidated below it. So look, we came all the way up. We just got the cross right here. So what's the most likely thing that's going to happen? If I had a guess, if I had to use technical analysis and make an assumption based off of previous trends, I would say we've already hit the simple moving average in blue right here. We're going to come down and we're going to touch the 200 exponential moving average. And now what we need to do is when we hit 9,200 down here, we need to take into account what happens. What does price action look like? Because I have a feeling it's not just going to come down and touch that, because it basically already did on that sell-off. And if you go to a different exchange, it may have already touched it. And you got to keep that in mind too. If you get that close, sometimes you need to keep that in mind as if the touch has already taken place. In which case, when it comes down, we got 4-hour candle closes along this trend line in yellow. 4-hour candle closes along this trend line in yellow. So there's a good likelihood that, we're going to come down here basically and try to maintain that trend. And now what's coming in line with that trend? Hang on. 377 and the 528. People don't even know about these. Okay, there's a couple people out there that use some of these sometimes, but all they are is they're essentially like Fibonacci number moving averages multiplied by like different time frames. So you have the ability to look at multi time frames. So your short time frame up here in the corner, 4-hour you're looking at, but you're really looking at like daily and like weekly moving averages is essentially like the point. So they line up like accordingly in the same way that the modifications that I've been making to the oscillator indicators lately are now allowing you to get signals and buy sell signals on multiple time frames as well. The idea being that you are always seeing the big picture. So you're looking at a shorter time frame, in this case the 4-hour, but you're seeing what's going on the daily, so you're not falling into some quick trap because you're like looking through a little microscope, when you should be just standing there like looking at things. In the same way that sometimes, like what we were saying about the weekly is, you're looking through binoculars. You're so far away, you're looking through binoculars, and you forget that if you just do what the weekly is telling you, yeah, that's great. You'll be in like yearly trends, but how often does that happen, and how long does it take to get you into a trend? Like, because when it's consolidating like it's been, by the time it gets you in, the trend has topped out. By the time it gets you out, the trend has bottomed out. So it's like giving you all these false signals. It's not because it's tricking you. It's not because there's like someone out there like getting in your head. It's because they're like lagging indicators. So by the time they're telling you, okay, it's good, the trend is already exhausted, and then it's going back in the opposite direction. And that's exactly what's taking place right now. We're essentially at a point where we would top out, and what we need to see is the trend is exhausted on the shorter time frames, and it's starting to sell off, and we got the cross. So now what is that going to like proceed is the daily time frame. So what we want to basically do is look what's going to happen on the daily time frame. Well, in order for the red and the yellow moving average to ever cross on a daily time frame in one direction or the other, they obviously have to cross first on the 4-hour time frame. So after we see the 4-hour cross on the time frame, let's look at this same exact one and see we crossed way back here. At when we crossed, you know, the cross took place on April 5th, and the price was at $66.56. Okay, so $6,700, let's say. All right, we got the cross. It consolidated around and bounced around in this range, trying to make up its mind what was happening. But finally, once the cross had taken place, it never crossed back to the downside through all of this action. Almost crossed right here, but didn't do it. All of this action. So now you're here at $9,500. Okay, so that got you in basically a 50% move. And now what we're looking at right now is this going to be another one of these situations where the price makes it down below and drags down the shorter time frame moving average long enough that it crosses, and then the bots and algorithms trigger that cross took place, and then we get like that massive move in that direction. Okay, so that's what we're paying attention to right now. So as soon as we were basically getting held up by this 8 moving average, okay, you can see it clear as day, obviously, that we were getting held up. And as soon as we break down from it, the next one we check is the 21. So here we are, we're finding support on the 21. But what I suspect is going to happen is we're going to close down here on like that 21. And then the next thing that's going to happen is we're going to come down and we're going to test that 55, the bright green one. And that 55, I'm sorry, the 50 or the 55 is the dark green one, because they're right around lining up with the parabolic SAR in green right here. So we're going to come down here, I think, and test these, and that's going to put us at this 80, basically 8,900 range roughly. But again, you have the 89 moving average right there at 8,600, and then you have the 200 next to that at 8,400. So I mean, it's just a matter of like the velocity of the move. We're essentially at this area where we're basically just being held up, and often what's happening is when price is being held up like this is we ran out of buyers, but the people that are trying to unload their positions aren't quite finished unloading their positions, so they'll continue to hold up the price like this, continue to hold it up, and then when they finally unload their positions is when you see like those violent sell-offs, because they pull out like their buy walls that are holding the price up, and then they sell and cause like the cascading waterfall effect. So what we need to pay attention to when this starts happening, when the waterfall starts happening, we want to look for divergence and support on like key moving averages or like horizontals to find somewhere to buy back in if you think the price is going to continue to the upside, or you know, to take profits on if you already are in a short position. And full disclosure, you know, I took profits on my, you know, leverage positions, and you know, I'm short in the market right now because I think we're going to get continued move to the downside. Now, does that mean we're going to go back down and go to a new low? Not necessarily, you know, but does it mean that we're going to correct off of like this move that's been taking place? Yes, I honestly believe so. So at this point in time, I think it's very likely that we're going to at least come down and test that psychological number of 9,000, and then what happens there will give us an idea as to, you know, what kind of follow through price action we're going to get. But based on all the longer term, you know, time frame moving averages, based on, well, the moving averages are more lagging, so they haven't crossed back over yet on like the daily and stuff. But based on like the stochastics, based on like the TJD, TDMACD, like exactly what I said is happening right now. We came down, came back up to it, flipped it back below it, and then got rejected before we even got to it. So now we're selling back off. We're putting in all these negative histograms. All that's going to happen is it's going to drag this blue moving average down, and as soon as it flips the slope, it's going to turn red, and then all it's going to be is a clear rejection of us trying to come back up and break through this. And then when you look at this right here, you have like the move up, and then our like weak move up right here corresponds with the price action of right here, which is a big move on the indicator, and that got us up to 10,071. And then over here you get this little itty bitty move on the indicator, and that gets us up to 10,249. So what that is, that's a divergence between the price action and the indicator. Now, it's not a huge divergence, but it's on the daily and it's much more clear. Like the difference in price is not huge. It's a very small difference. It's smaller high on here. But when you look at the indicator right here, look at that. It's a massive amount of energy got the price to where it was at there, and then an itty bitty bit of energy got the price back to the same spot and then even higher. So that makes you think, wait a minute, that's a divergence. Often divergences happen at the end of the trend, and that represents like the reversal point, because it's like that cascade happening, and that cascade all of a sudden happens, and then finally you can get enough energy to move the price back in the opposite direction. So that's what we look for as essentially like reversal points. Now let's look at our blue is coming down right here. The purple is lagging, so it's going to look like the purple came up right here, and then it's going to look like the blue just blew right through it. And then again, the yellow was coming down slowly, got almost picked back up to have a positive slope again, and now what's going to happen is we're going to start coming back down again. And the orange was already like peaked out right here, had a nice solid move up, and now it could put in another step like this, but it looks more likely like it's just going to roll over right here. And that's what this blue line represents, as like the resistance area for inside this. And the same way that this represents a support area for inside this. See, people don't realize there's so much more to these indicators, than meets the eye when you're just glancing at it. So if you ever want to, if you don't know how I did that too, you can just double click on it and it will make it big like that. And you're able to see like all this extra information that's inside of here. So, but at this point in time, like I said, it looks like we're going to now sell off, get this cross on the moving averages, and then we're going to come down here and test some of these key ones. And the way they're all just like on the daily, just one step after another, it might just look like stair steps right down, one, then the next, then the next, then the next, and we'll get bounces along the way and then come down and test the next one. What we need to pay attention to is how is the momentum playing out. Like, are we taking 2 steps down and then 1 step up, and then we're slowly just going down? Or are we taking 2 steps down and then 3 steps up and slowly continuing up? Because that's how we're going to identify like the shorter term trend and get on the right side of it. But at this point in time, there's no reason. We're at a risky point in the market. Even if it continues up from here, we can get back in and that's fine, but we de-risked. And the same way that if it sells off right here, when we get down to some of these key moving average resistance or supports rather, we can de-risk our short positions or buy more spot, and accumulate at a lower price after we took profits on those same positions, and that way we essentially are just de-risking. So we're not fully, I can't wait until we're back in an uptrend and I can be fully long, with a little bit of leverage on top. I can't wait for that. In the same way that, when you're in a multi-year downtrend, getting ready to capitulate, you're fully short with, a little leverage on top. But in areas like this, uncertainty, key resistances on longer time frames, that there's a lot of stuff lining up telling us, like Confluence, that this is most likely going to be the top, or at least there's a high likelihood it's going to be the top. Even if it's 50-50, I don't like those odds, because I like odds in my favor, and that's where I take trades are. I take trades with high likelihood of success, with high risk to reward ratio. Look for ideal situations rather than just running into a trade because everybody else says it looks good. Because to me right now, this doesn't look good. This looks bad. It still looks bad. It's looked bad all through this area right here. I think, in my opinion, what this looked like right here is we got that push right up here, and that was the top. We sell off like violently, come back down, retest the golden cross, and then essentially get the move back up. We put in that lower high. That to me looks like this is like distribution taking place. And then oftentimes once distribution takes place, if it's not finished yet and before it can roll over right here, a lot of times the people that still have large positions, the market makers, will move the price back up, like march it back up and then push to a new high like this. And then all of a sudden, finally after they push to a new high, you'll come back down, consolidate, and then you'll hit your last point of supply, which is essentially like the last area before like your next dump. So you come down, come back up, sell off, come back up, sell off, and those are like your last points of supply. And essentially what that is it's essentially like people unloading enough of their position that they're ready for price action to move in that direction. But it takes time to move big amounts of capital, and that's why a lot of times what'll happen is you'll end up in an area like this. This had looked really toppy to me, not only based on Bitcoin, but because of what alts were doing too. Bitcoin came up here, put in a high, and kind of consolidated. A lot of alts had already burst out to a new high. A lot of alts waited, and then while Bitcoin was consolidating, burst to a new high. All that is essentially like solvency taking place. It's moving your money around to like take profits in different ways. So you'll like make a bunch of money on Bitcoin on the way up, then move into another alt or something like that that's lagging behind, like Ethereum. And then after Ethereum, gets all that extra money pushed into it, while Bitcoin is just consolidating, doing nothing, Ethereum can break out and essentially catch back up to Bitcoin, because you'll notice that like most other alts were on like more of a bearish retracement than Bitcoin was. Bitcoin was reaching like higher fib level retracements. And then after it consolidated here long enough, you see the alts break out and hit those same retracement levels. And then essentially like this all plays out. And then, like I said, what I think is going to happen is we're going to dump down here and retest like some of these higher time frame moving averages. But when I look at the real long time frame, long scale of it and everything, and look at this weekly candle developing and everything right now, and I look at, this is the most important right here, how long we said each of these, this blue lasts for so long, red, blue. So the likelihood that this is just going to all of a sudden like break above here and go is very unlikely. And if it does, it's going to be very obvious, and then we'll be on a long-term trending trade to the upside, and we can sit back and relax. But right now, it looks like this exact move where we came up here and then got a violent rejection. Came up here and we're going to get a violent rejection. That's what it looks like to me right now. And then the candle is about to close tonight we still have 7 hours till this closes. So a lot can happen in that time. But if we don't close, with a nice green body right here, it's going to look bearish based on candlestick analysis. At which point in time, we should it might try to push up, but the next target is like 87.40, 87.50. So 87.50 is my next target, if this was to close right now, based on how it looks. And then it's the same thing with the oscillators. Your blue basically came up, got rejected, came down, found support on the yellow and the orange, and got that bounce back up. And now here we are at the blue resistance line, and the purple is just kind of coiling, just getting the move back to the upside, the same way that the orange and yellow are just getting that move to the upside. So if this continues to the upside, it'll look very clear that we're entering a long-term trend to the upside. But if it gets rejected right here all of a sudden violently, it's going to look very, very clear that this was a violent rejection. Just like this, where it's blue like that, and then it hits the purple and sells off violently. It's going to look exactly the same right here, where the yellow came up, the orange was bouncing, trying to get a move to the upside, and then gets rejected and crosses back through it, and then drags the orange down with it. So that's what we need to pay attention for. It'll be very clear in the indicator oscillators, but at this point in time, I think that a 20% move is likely looming. And someone had asked me also real quick about was curious essentially about stuff like Chainlink or Tezos, and why they had been like outperforming, and if there was like better fundamentals behind them or anything like that. And without even getting into the fundamentals, one of the most important things to realize about things is once a chart is not making all-time highs anymore for long enough, every time it bounces back up, there's more selling pressure as the price keeps going lower and lower. More people are just trying to get out of the position, and that's like your lower highs. So once a chart starts doing that, there's just so much stacked up selling pressure on top. Every time it tries to get a move up, there's just people selling into it, just trying to get out of underwater positions or get out at even or whatever it is. But when you have a chart that's always going up like this, you never have to worry about that, because you get up here and nobody's ever underwater, nobody's ever underwater, nobody's ever underwater, nobody's ever underwater. I mean, there's like tiny little areas, but all you have to do is like wait a week and you're back up again. So if something's going up like all the time like this, there's no pressure on top. So once you hit that all-time highs, there's no pressure. And that's why once we finally break out on Bitcoin and we hit all-time highs, there's no selling pressure. There's no reason for anyone to be selling into it. Everyone's just going to be like buying and merry, and it's a rocket ship taking off. But right now, every time we put in a lower high, we just get more and more selling pressure. So we had all this selling pressure built up here, and then we blew right through it. But then now, every time we get back up here, we just end up with more and more selling pressure. More and more selling pressure. So that's what we need to pay attention to. And stuff like, Tezos and Chainlink, the only thing that makes one of them necessarily, without taking into account fundamentals, but the reason like chart-wise and technicals, they're better and look better than something like, XRP or, Cardano or something like that is because when you look at like XRP or Cardano chart, like it's constantly making lower highs substantially, and it's still down like 90% plus from its all-time high. So that means that like, somewhere between 75, and 90% of the people that have bought into that, asset over the last few years are underwater. So there's just more and more and more selling pressure. So at some point in time, a lot of people will just cut the cord and get out of that and turn around and put their money into something like Chainlink or Tezos or something like that, because it's like the new shiny, altcoin. So it doesn't necessarily have to be better. It's just better in the sense that not as many people have lost their money in it. So there's not as many people upside down, so there's not as much selling pressure. So that's why a lot of time with projects, you will see the same people move from one project to the next and create like the same thing, especially in a space like this where so much of everything is like open source, so you can basically just copy anything if you know anything about like being a developer or whatever. So if you're involved in one of these projects and then you decide, okay, I'm going to break off and do my version of it, which is essentially like what Cardano is, or what like some of these other alts are, basically like everything that's based off like Bitcoin's blockchain is essentially just like a hard fork of somebody saying, oh, we can do this better. But really what happens is it's just like centralized worse version of it in all actuality. So the most important thing to pay attention to, and my point essentially is, what happens with these developers is eventually after a while they're not making breakthroughs on this, or it's not providing like what they promised. It's just easier for them to just focus on something else and move on to a new project, raise a bunch of money, and sell the dream again to somebody else or the same people or whatever. And then you just say, oh, well, we just had a disagreement, or they were trying to take this in the wrong direction. And that's essentially what stuff like Bitcoin SV and Bitcoin Cash is. It's essentially like Craig Wright and Roger Ver having like a tiff over why this is failing, but it has nothing to do with the real fundamental problem with it is it's just a worse version of Bitcoin. That's why it's not outperforming Bitcoin. And that's what most of these altcoins are, is they're essentially like a marketing scam or a dream or whatever. And I'm not saying none of them will ever succeed, but essentially if all that scammed money and all that like horrible marketing and wasted money and millions of, or billions even, of dollars that have gotten like essentially extracted from the ecosystem by all of these scammers, by all these people who said they're gonna make it better, they're essentially damaging the actual core product. So the problem with Bitcoin is it's all open source, so anybody can just do this. So if you get enough name and a good enough marketing team, you can basically scam people in this space because it's not regulated in the same way, and there's nobody coming around saying, hey, you can't take that Bitcoin code. So it has to hash itself out over time and like sort itself out. But that's why Bitcoin maximalists get so like moved by all this, is because they understand that every one of these like altcoins, every one of these 2,000 altcoins, like none of them are providing anything real to the space. Like they're all just like selling a dream or like marketing like a solution. But in the end, how many of them have ever actually like created a project that functions and is useful and serves a purpose? Like that's the real point. And that's where I think Bitcoin maximalists get caught up, is there are some of these other projects, and there are some of these other coins, and there are some of these other things that do serve a purpose. But in all reality, for every one of those, there's like 500 other like scam crap junk coins that are just here to extract money. And people have been arguing about this whole like central bank printing money and Federal Reserve printing money and devaluing currency and all this stuff. And like you can't really argue against that anymore in the crypto space, because as long as you have like stuff like Tether and all this stuff, essentially what that is just like a Federal Reserve. There was like that whole scandal about if they were even backed 1-to-1, and then at that point in time, it's essentially just like the real banking system has just like infiltrated like the crypto banking system. Because if you can just print dollars and then just buy Bitcoin with it, doesn't that just defeat the whole point of the non-inflation? Can't just all like the rich people take all their dollars and just buy Bitcoin with it, and then they have all the Bitcoin and there's still all the rich people? Like there's just flaws to like the whole idea of the whole system and everything. So it's important that you keep in mind that if there is a change or a shift completely into Bitcoin or completely into a cryptocurrency, it's not just going to happen overnight. It's not just going to change the world overnight, because it takes time for all this money from Wall Street, all the existing money, all the existing wealth to shift into whatever it is. And it's the same way with gold. Like you don't just see gold all of a sudden like shooting up to like $10,000. It doesn't mean it's not going to be $3,000 or $5,000 or $10,000 in the future, but the price isn't just going to shoot up overnight, because it takes time for all this money to shift into it. And it's the same way with cryptocurrency. Like I'm confident that if you have a basket of the right cryptocurrencies in the next 10 years, you will be living the good life and you will be way ahead of the game. But you just have to make sure that you have the right basket. And the truth is, right now, nothing has proved itself over the test of time functionally in the same way as Bitcoin. And so far, I haven't seen anything like biting at its heels or anything like that. So, that's why I consider myself, essentially for now anyway, at least in a bear market, to be, more focused on Bitcoin. And I'll take trades in other cryptos and everything. But when you look at the charts on them, I'm not going to hold something that's in a downtrend long term. I'm not going to hold something that's constantly making lower lows. I'm not going to invest in something because it got a little bounce and it's up 200%, off of its recent low, when it's down 99% off of its all-time high. And that's the important thing to remember, is even though Bitcoin is in a downtrend over time and it's been years of this like consolidation, overall the chart still looks much better than most of these like altcoins. In the same way that if you look at the stock market, it's literally designed to constantly make new highs, because the way it works is it's based off of like the economy and expansion and more people and more wealth and more assets and more money and more. It's based off of just growth. So because of growth, it's just going to go up over time, because there's just always going to be more. And that's the way it's designed to work, because there's just always going to be more people, and we're always going to need more food and more iPhones and more houses, and that's essentially like the design of it. So and the whole design is to put your money somewhere so that you don't lose money over time because of like inflation. Well, the problem with what's going on here soon is they're afraid that stagflation is going to happen, where essentially like we lose that growth. And if we don't have that growth, there's nowhere to put your money without it going down and losing over time. So what do you have to do? Well, you buy hard assets like real estate and gold, and in this case, potentially digital currency. So just because the stock market is doing good right now and potentially going to make all-time highs and keep moving up, doesn't necessarily mean that the whole crypto space and the whole idea of cryptocurrency is not still just right on track. I mean, the ideal situation, honestly, through all this is basically that crypto just continues on and keeps on keeping on. And no matter what happens with the stock market, no matter what happens with the real world, it just keeps going on and keeps doing its thing and just survives for another 3 years or 4 years or 8 years or 10 years, whatever it is. Because the longer it exists for, the longer it's going to continue to exist for. And that's what we want. We want to just keep outlasting. And eventually, after a while, people won't know anything but Bitcoin, the same way that younger people now don't know anything but cell phones. Like, I'm old enough. I remember when cell phones came out. And when I got a cell phone, I was one of the first people to have a cell phone. Like, it was definitely like a different time and a different change in things. Before that, they had like car phones and stuff like that, pay phones. I mean, how weird is that to even think about right now? Like, you're just going to run up, especially in these times when everybody's afraid to touch anything or get near anybody. Like, you're just going to like run up to a payphone and use your payphone and touch all these buttons. Yeah, right. I mean, it's just crazy to think about that. And in the same way, in the future, cryptocurrencies are just going to be an integrated part of society. It's happening. Okay, so don't get too focused on the micro and don't get too focused on the macro. But understand that you don't want to invest in things in the sense that you want to just buy it and hold it if it's not making all-time highs. And that's where I'm going to stop it at today. Crypto Trend Trader, and I'm out of here.